All right, welcome back to another Macro Monday. There's not too much more to cover other than last time, really. I mean, Mark hasn't really done much, but just to recap the macro, right now we do have, well, the Fed is going to make its decision in June, I believe, so a little bit over a month, and they could either hike or they can hold. If they hike, that's probably when I really do expect a pullback for the market. If they do hike, if they hold, then it'll be somewhere near the Q4, near maybe October, maybe December, whenever they hike next. That's probably if they hike next. That's probably when the market will pull back if they do. But this is all just speculation right now. And that's kind of actually I'm gonna focus on that more than the macro today. I'm gonna be focused more on the charts because that's where it is right now. The macro, nothing has happened yet that's really screaming at us. Before this entire, let me go to SPY actually, because this entire drop on SPY was all speculation, right? It was all the war happened, but nothing technically bad has happened in the macro yet, right? But now we're seeing that. Like last week, we had inflation actually come out pretty bad, and it was taken higher, right? And so now that is one thing, but it's not everything, right? We still need the Fed to hike, so that could happen in June, could happen near the end of Q4, right? So those are the times where the macro really does start screaming bearish, right? Or if the dollar starts soaring, which it hasn't, it's bullish, but it hasn't been soaring yet, right? So we still need some macro stuff to align more bearish, right? Right now it's all just speculation, right? So, which isn't really enough to justify not buying this dip. That's why I bought the dip, right? So other than that part of the macro, nothing has changed other than we expect the Fed to hike rates and then inflation will probably start going out of control until then. But that's basically the play now is probably near the end of Q3, maybe middle of Q4. Really depends on if the Fed hikes in June. But I do expect a massive short-term rally, very volatile short-term rally on SPY, just because of the charts we're about to get into when we get to the Max 7. So if we look at oil, this was one of the macro signs. Oil is still high. And it is, right? It's still high, and this is still not a good sign, even though this war is, it was ending. Now it's not ending. Now the ceasefire broke, and then they made a new one, and now it's broken again. So who really knows? But as of right now, oil is still high. So regardless if this war ends, if oil still stays high, then it doesn't even matter if the war ended, right? Because the macro is still bad. So oil does need to go back down, but the question is, will it go back down, right? And I don't see it going back down. Maybe I could see like it touch that 71. Maybe it would have to invalidate the switch to do so. But that's not the base case. My base case for oil is we could go back down to 88 for a retest, and then we go higher, right? But I don't see us leaving this consolidation, even if the war ends, just because things have not actually gotten better. They still bombed the factories. There's still going to be less traffic through the Strait of Hormuz, even if it does open up again, right? Just because of risk, right? The risk of it happening again, right? So the factories are not doesn't have enough oil to really be doing anything. Factories are down; they're getting bombed, and on top of that, even if the Strait does open up, it's still not going to immediately go back to full capacity like it was, right? Full capacity was pushing us down to high 50s, low 60s, and so in order to get there, we would have to get that same capacity. So we're not going to get there with worse capacity and way worse traffic through the strait, right? So it doesn't make sense for us to go back down. Maybe second case is we retest it at 71, and then for a short term we pop higher. But that's not my base case. Base case is minimum of 88, 89, and then we'll push higher, if not push higher already right here, because we already technically had the retest. So we definitely could push higher for oil this week. Minimum target would be 119, 117, 117, 119, but we could definitely rip even higher than that. So that's definitely something I'm watching for oil. And again, I still hold my CVI. CVI does look extremely bullish with this falling wedge breakout and retest. Now you can also change this to look like this, and that is completely fair. But regardless if it is like this or if it like this, it's bullish regardless, right? The ABCDE doesn't change. This is just a higher low holding, and we're going for a break. So regardless, it is still bullish. So nothing really changed. So I'm just gonna keep it like this. But that is just keep in mind that we are if the wedge could look like that and could look like a rejection. So do keep that in mind if oil does start to actually fold down. So overall, I am still really bullish on oil. That's why I see the as my biggest position. I did add a new position, METU. Just starter position. It is a leveraged meta long, just because of what we're about to get into with the Max 7, right? So that is a new holding I added the last week. Now let's go over to yields before we get to the Mag 7, since the Mag 7 is the biggest thing. And actually, ES is green, or it's basically flat overnight. But yields. So yields, that's 10-year, has, ooh, we gapped up. Oh, no. Yeah, I guess we did. But the yields can look like a rejection like this, and then we could push down to wave E, or it could look like this, and this is a breakout and a retest. So if this was a breakout and retest, then absolutely amazing. That means yields are going to rip, and we're probably going to see 4.5% for yields, right? So this would be a really, really bullish chart, but you could also justify it as this. If you do it like this, it does have an A, B, C, D, E, so it would be really good. But, you know, again, if you look at the macro side, right, this may not start going higher until the hike, so until June. So we have over a month of consolidation we could do, right, or maybe even a small breakout. But I don't think it's going to really move until the Fed hikes rate. But I could be completely wrong. We could absolutely start ripping now, and that would be completely justified. I would be a very happy man if that happens. But we'll see. But overall, just look at the chart. It can be manipulated. It changed, so it could be a breakout or maybe not. It could just be a rejection. But regardless, it is still bullish in the intermediate term. My contracts don't expire until September, so I have plenty of time to consolidate to the screen zone or whatever we want to do. Right, so I'm okay with this move. And you can also see maybe a better version of this on TLT. Right, we are bouncing off the bottom. You could just fight like this, but again, that's not a clean breakout at all. It's not going to retest. It'd be more of a false breakout. So I am kind of leaning, unfortunately, to a one push higher for that wave V. But, again, contracts don't expire till August. So I'm completely fine with that. So still bearish, but, we may not even move until June. So we will really see when time comes. But I do definitely think we'll probably push up to one more high before we actually rolling over. But overall, still pretty bearish long term for the bonds. So that's basically that's basically the macro. Nothing has really changed. Just still again looking for oil to go higher, and looking for the Fed to hike rates when the time comes. But we still got over a month ahead of us before then. So until then, we are long on the markets other than CVI. Now let's look at the Mag 7. We'll skip Tesla because Tesla is a very important one that I'll be watching here in a second. But Meta. So I entered Meta. The reason I entered Meta was because on the higher time frames, the weekly, we have this falling wedge, which is a wave 4, which I believe is a 38% pullback. Yeah, it's a perfect 38% pullback for wave 4 with this falling wedge. It has a perfect A, B, C, D, E here. We are at that rejection level, so we could reject or we could break higher. It really depends how volatile the SPY wants to be. But if SPY does want to be like really volatile, then we just break out and we go straight to the minimum target. I'd be completely fine with that. I have a starter position, but I'm not going to enter full position until we pull back to that green zone at 624. That is when I'll enter full position, assuming we hold it, right? We still have to hold it. So I'm not going to be longing just because we touch it, but once it start showing some bullish signs, that is when I will be entering a lot more into Meta, and also the leveraged version of Meta. And then my targets will be minimum target of $795 and a wave 5 target at $1,000, a little bit more. So that is why I'm long Meta. Is also a bet on AI and on the tech sector. So and that is also on the improving side. So it was underperforming, now it's improving. And usually they rotate in a circle. It goes from lagging to improving to leading, and then to what was it? What was the next one? I don't remember, but unimproving. So this definitely does have progress on the sector space to push higher. So that is why I long Meta. Google, don't really see anything on Google. Apple is also pretty bullish. Again, wave 4 following wedge. We could pull back to 261 for a higher low before breaking, but overall, still really bullish. Microsoft could be wave B. I don't think we'll go back to all-time high, but we could. But overall, I mean, it's a good long-term ad, but other than that, not really anything I'm watching. NVIDIA. Now, this one is really good because now we're actually pushing to that wave E. And right, like before, we didn't do that. So now we're actually pushing to this wave E, bouncing at that wave D. And as you can tell, this was a pretty big move already. Now we could hold that momentum and keep pushing higher. It'd be a very volatile move, but a really short to run. Or we could start pulling back now or consolidate and slowly move up. And then we rotate into AI like meta stocks and crap like that. So that is something to watch, but I still see NVIDIA pushing to 245. Amazon, don't see crap on this really. Tesla, though, I may enter position this week. Now, the reason I might be entering position is because of this, okay? One, wave 5 is subjective. Okay, again, wave 5 could very well go much higher. This could just be an extended wave 3, right? So we very well may go higher for Tesla, maybe back to all-time high. I still don't think so. My base case is that we will reject 257 and then we'll fall down for that wave C down to 230 before we actually just go very parabolic, right? And I still have that as my base case. But overall, what you cannot deny, even for this bear chart, like this bear flag A, B, C, D, E, even with this shows that we're going to pull back for a lower high at 458. So regardless if there's a bullish or bearish chart on this, it is still going to push higher to 458. So this is, and I also I'll bet on this with TSLL for leverage, but that is a free 25%, not including the 2 times leverage. So it'll be around a free 50% gain here, assuming we can hold this retest level. Okay. Now, I got off a call with my coaching client this morning, and we were breaking down Tesla very in depth. And this kind of looks like a controlled pullback, right? This isn't a sharp move down. This isn't a sharp move up. This is a very, very well pushed lower move in a consolidation phase. It's just been consolidating downwards while the market rips higher, right? So this is definitely not a normal pullback. So I'm not saying it's bullish, but it's not the normal pullback. So we very well could get a very violent move higher, right? And it also has decreasing volume the entire time versus when we crashed last time, it was with increasing volume. Even here, we had increasing volume halfway through it, right? Now we just had decreasing volume that entire time, right? Which is not a good sign for the bears, a good sign for the bulls, right? And if you ignore Elliott's wave, we're also bouncing at a very obvious support zone at the bottom of the trend line and at the retest of this channel, right? So overall, this is still a basic technical analysis are screaming bullish right now for Tesla. And so regardless of what Elliott's wave says, I think we will push to 455. And then, we can decide if we're going to reject and fold over, or if we're going to push back to all-time high, or push to the top of this channel, or we just invalidate this and just go for a bull run, right? I don't see that at all. I could see at least 457, possibly I could see 525, but at least the purple zone, right? So it's basically free money for me. That's why I'm probably going to enter it. And this was a clean retest Friday at close. So definitely something I'll be watching. It was right after earnings too. So earnings was definitely saw the news, obviously, since we didn't get a retest. But this is something I'll be watching, especially since the SpaceX IPO, which can definitely fuel Tesla. So this is something I would want to be in, just to bet on SpaceX IPOing in June. So we have 1 month, and a little bit over 1 month until the IPO, but we don't really know for sure the exact date, but it is rumored to IPO in June. So if it does, that's good, but if not, then oh well. But regardless, I still see a purple zone. That is my main target for Tesla, so I'll be betting on this. And, worst case scenario, if this correction is wrong, then I make more money going higher, right? So this is definitely a really, really, really great risk-reward trade here for Tesla, right? Almost a no-brainer. So I'm entering this, probably enter a little bit heavier position, not full size, but not a little bit more than starter, just since we're already at the retest level. A starter position should have been made when we were bouncing at that trend line at the start, but a little late to move, but it's still a retest. It's a higher lows retest, so I'll be entering that higher low and retest level this week. So that's unless of course, unless we gap down a lot Monday morning. But if we open up flat or a little bit green, I'll be entering off that retest. But that's Mag 7. So as you can see, the Mag 7 is screaming bullish. Tesla's bullish, Apple's bullish, Meta's bullish, Nvidia's bullish, right? So that's 4 Mag 7s that we are extremely bullish on. Even if, regardless of the macro view, right? Who cares about the macro view? The chart is saying all bullish, right? So this is a very obvious buy the dip moment. And I think that is probably what I'm going to do with Tesla here, just like I did with Meta. So that is Tesla. That is the Mag 7. CRM, I did add this, and I ended up selling everything on this just because I replaced it with Meta. But I still think we can pull back for Wave E at 161 before seeing higher. But overall, once we see that Wave E, it could definitely be a good trade. But I think there's better setups, though, with Meta and Tesla now. I like that more than CRM. So I'll be trading CRM for those. But other than that, I'll still love a pullback on EOC, but we may not get that. So that's completely fine. Let's look at Bitcoin. Bitcoin is still sitting at the top of this bear flag. We're still sitting up here and rejecting, right? So question is, are we going to go higher and invalidate this bear flag, or are we going to actually start rejecting it and start folding over? We are rejecting, but we're not getting the folding over part. And so we need that. And I think it happens. I know a lot of people are on the sidelines here and they don't think we're going to push higher. And I think they are correct. We could invalidate this and rip higher for Bitcoin, but I would have to bet against my chart, which I do not do. So I am waiting for lower at 49K. But I still have been buying. I think my Bitcoin and ETH position is almost as big as my entire stock portfolio. So I've been buying a lot of Bitcoin and ETH. So that's definitely something I'm still buying, even though I do expect to lower. But I would love to buy more at 49K. And ETH is at a very crucial part here, with this breakout level. So we need to break out now. We could have broken out already. It's not a clean break, so I'm thinking the trend line is just moved differently. I don't know. I'll have to review this more, but I don't know. I'll have to review this more, but I don't think ETH is really breaking out here. And if it is, this is not a clean breakout. So I would need a clean breakout. This is most likely going to be a false breakout, right? So, and if we compare ETH to Bitcoin, it has been underperforming for 2 weeks. Yeah, so something that's rolling over, not something I'll be looking at for longs. I mean, I've bought some just because it's undervalued, but not betting on it for a altcoin run. That's why I don't own Sol anymore, Doge or XRP or anything like that. I just own Bitcoin and ETH right now. Actually, no, I do own some Sol, I think. I might own some Sol, but I don't own anything else. So mainly it's Bitcoin, ETH, and some Sol. But I know for a fact Bitcoin and ETH. Mainly Bitcoin and ETH. If I do own Sol, it's a very, very small amount. So, but that's Bitcoin. That is the Mag 7. That is oil. That is my bet on yields. I went over on some new positions I added. Is there any tickers you want me to add or chart or any updates on? If so, type it into the chat or forever hold your peace. And chop into the main chat, not the live stream chat. I'll give you a second to do that. As y'all do that, let me go over some other stuff. Nimbus absolutely rolled over Friday at close because of a wave 5 rejection. Let's actually look at the space sector since I haven't looked at it in a while. Where was TTD? Tech. I'm going to move this to technology. But if we look at ASTS, we are still inside this falling wedge, which could be for wave 4. Now, it's not a clean falling wedge, but it is still a falling wedge, probably. So, we still want to hold this wavy, but this could run up with the SpaceX IPO. Same thing with could be for Rocket Lab, but it already ran, and now it's falling over pretty sharply from that red zone. But we could hold a higher low zone, maybe at 73 at these EMAs, right? We could make a higher low, especially if you really want to run with the AMD setup, right? AMD, accumulation, manipulation, distribution. Well, when a distribution leg happens, it usually does form a higher low. Now, usually on a smaller time frame, but it can happen on the weekly like this, and that would signal a massive run higher. So if Rocket Lab does pull back this week, and we do start bouncing on this EMA like this, I will definitely be looking to re-enter my Rocket Lab position. So that is definitely going to be a really good entry, and then we'll for sure go back to all-time highs. So that would be phenomenal. And you could also possibly consider this as a falling wedge. Possibly. And if it is A, B, C, D, E, yeah. So we'll still expect a wavy. So if it is a falling wedge, which it's still way too early to tell. But if it is, that is something we would expect. But either a falling wedge, which I don't think it is just because of this manipulation leg we had. I think we will hold this higher low zone. But if we do, hold a higher low zone and rip to all-time high. If it does, I would definitely be looking to buy more Rocket Lab 2 to bet on this run higher with the space sector, just like Tesla, right? So, but there is no chart request in the chat, so I guess I'll wrap this one up here. It's a little quick one, but it wasn't too much to cover. So I'll see y'all. No, I will not. I will not see y'all Sunday because next Sunday would be the roundtable. We'll be doing roundtable part 3 next week, so I won't be on the live. So, but hopefully this week has some really good stuff in store for us, and I'll see y'all at Market Open Monday morning.